Diesel supplies are reaching critical levels in the United States, in particular right here in the Northeast. The Energy Information Administration reporting just last week that the country had only 25 days of reserves remaining. Now the Biden administration weighing options to avert a crisis as we head towards the winter. For more, we're joined by OPIS Global Head of Energy Analysis, Tom Kloza. Tom, good to see you. By one metric, diesel levels lowest in 40 years. How concerned should we be?
Well, I think we're concerned. I'd be a lot more concerned if this were the end of November or the end of December, because diesel fuel and heating oil, they're the same molecules, essentially. And it's used a lot in the Northeast and it's used in Europe. So we've seen prices in the Northeast go up by about $1.20 a gallon this month alone. And that's for diesel and for heating oil. The rest of the country, maybe 50 cents. And I would say that in a couple of weeks, when you get PPI numbers, that's going to haunt the inflationary aspects of those numbers.
Tom, how long do you see supplies remaining tight then, throughout the winter at least?
I think so. If we get a mild winter, it really alters the calculus. And we do have some time now. It's probably worthwhile that we see these, the use of the word shortage as opposed to tightness or whatever, because something does need to happen. The problem is December 5th is when the European Union essentially begins boycotting or banning Russian oil, and Russian crude oil and Russian diesel are pretty much necessary for Europe and most of the North Atlantic. So it's going to be very, very touch and go. I would submit that maybe in the next 40 days, we don't see much short selling in the market. And like all markets, it needs short selling. So we're going to be very, very high up there. And again, I think it's bad for inflation. Everything moves across the country by either vessels, which use diesel now in their mix, trains, and of course trucks. And it's very expensive with $5.50 to $6 prices out there.
Tom, speaking of Europe, we all talked for weeks, if not months, about a coming energy crisis in Europe. And now European natural gas prices plummeting. They don't even know what to do with it because supplies are full. Is it too early to say coast is clear?
Yeah, I think it's way too early. Now, it does tell you what happens with these markets that make parabolic moves. I mean, natural gas went from the equivalent of like $100 a barrel to $500 a barrel at the end of August, and now it's back to about a third of that. So the same thing could happen in the United States. We're going to see the refiners get back in gear in the next month. They've had a lot of maintenance in October. They're going to make more gasoline, but they're really going to try to make more diesel, jet fuel, and heating oil because they're making $60, $70, $80, $90, $100 a barrel. They're making their fourth quarter margins right now in the first month of that quarter.
So, Tom, when you take a look at Europe, it sounds like it's more of a sigh of relief rather than the fact that maybe Europe policymakers should be complacent. I guess, what should they be doing or could they be doing to make sure the situation doesn't get significantly worse throughout the winter?
I think they're doing everything they can do right now. I mean, an embargo or a boycott is going to be very, very uncertain, and we don't really know what's going to happen. I mean, we have a desperate despot in charge of Russia, and he could cut off some of the supplies that would ordinarily go to Europe or some other countries. So there's a lot of uncertainty, and I don't think you'll see much selling in the market between now and December 5th.
All right, I'd be remiss, Tom, if I didn't ask you about the Twitter back and forth between Exxon and President Biden. Exxon CEO suggesting on Twitter that's exactly what they're doing in the form of returning profits to the American people in the form of their quarterly dividend. And the answer from President Biden was, can't believe I have to say this, giving profits to shareholders is not the same as bringing prices down for American families. What's your take on this back and forth?
My take on this is like, well, at my country club, we don't have any unemployment. It's really tone deaf on the part of the Exxon CEO. I'm sorry, but giving money back to shareholders is not the equivalent of treating the people on the margins of society who are paying these prices for heating oil, diesel, kerosene, or whatever. He needs to, speak to the people on Main Street and not on Wall Street.
And Tom, to that point, taking a look at Main Street, we know Exxon just posted another record profit. But when you take a look at gas prices, they have come down quite a bit. Here we are today at $3.76. When you take a look out over the next couple of months to year end, are you confident we'll remain below $4 a gallon?
Yeah, I think we're going to be okay on gasoline prices, because companies like Exxon and all the refiners right now, they're going to be making so much money on the middle of the barrel, the diesel and the jet fuel, that they're going to make a lot of gasoline, probably more than they would intend to make. So I think we're okay. And in the months of December and January and even February, we use about 15 to 20% less gasoline than we use in the driving season. So the whole thing, again, is, in the next 90 days, we'll look not so much for a point of stasis, but the launch pad from which the prices go at the end of the first quarter to 2023 or in the spring.
All right, Tom Kloza from OPIS. Appreciate it. Enjoy the weekend, sir.
Thanks.